Good morning. We're live from the International Financiers Stock Trading Room. What we're looking at right now is me and the S&P. As you're looking at right now, we've had a very strong morning to the upside. We're kind of range bound all morning long. I'm going to show you, they always tend to shrink on me here, what I'm looking at to a T. As you can see, this is the 30-minute. We're above the RSI on the 70, so that means there's going to be some give back. As you can see, here's a good example. Noon on Saturday, we have very strong RSI up here, and naturally we gave some back. We're hitting that levels again. Anything above the 70, anything below the 30 is considered weak. As you can see there, it went down, and sure enough, it came up again. So either way, I have my levels drawn at the 84.50. I'll just say a full at the 3300 84.50 mark. That is my key level. As you can see, I marked that level here because the high off of this wick is 84, and you can see there was a lot of selling at this level. This was back on, this is the 1st of October, so I believe that was Thursday. Yeah, Thursday. So we're now hitting that level again. So I'm placing my trades on the minute one. I see some sideways action going on here, and so sure enough, I expect there to be a good short. I'm fading in. I'm at 84 level. As you can see, it's just kissing it right now.
Position open.
There we go.
Order submitted.
So I got a 6-point profit target on here, and a 3-point trail stop, or handle, I should say. It's really 4 ticks a point. That's how the S&P E-mini is priced out at. So I'm just going in one. Normally I go in two, but because I have something else that I follow really closely here at the 85 level, seems to be holding up pretty well. At 84.5, we'll see here. Even just looking at the dome here, you can see the bulls and bears are just slugging it out at this level, and they have in the past. Looking back at the older charts, bears won that one. Obviously, we gave some back, so I do expect some sideways action to go on here in my favor. Now, if I hit this target, I'm getting rid of the 85.50, because at that point in my mind, this play is over. So it's pretty much a 2-to-1 ratio. You know, it's nothing fancy. I know some people out there 3-to-1, 4-to-1. I should probably do a 3-to-1 ratio on this, just because of how I have numerous indicators, ones that I've done and ones that, you know, like the RSI, in my favor. It's almost as if the stars are aligning. So I should plays like this, where I have more than one of my indicators, or indicators that are, you know, already done in my favor. They're usually higher percentage. I'm sorry in advance that this is going to be a longer than usual video. That's trading. That's trading. You got to be patient. One of my favorite sayings is Warren Buffett: trading is simply the transferring of money from the impatient to the patient. So if you're impatient, don't get involved in any type of investing, for that matter, because things do take time. And if you're patient, this was, you know, you're good with math, along with a couple of other attributes, this could be it can be very profitable for you. So either way, as I wait, what's good about this target is it's right above the previous range. This is a 3-minute chart. I've used a minute chart, 3 minutes. Board's gone back and forth. 3 minutes good for watch for consolidation. Now if I were to gotten in at 84 and a half with two contracts, I'm in one right now, I have the other one waiting at 85 and a half, I probably would have sold one off here at the 81 level. I would have sold one off here just because it's the bottom of the range. You know, I would have made a profit. I would have moved up my stop loss to the break-even point, and at least I would have locked in a profit on that trade. Protect your bacon at all costs. So right now it's a big update. It's a big update. So we'll see. It's just kind of a counter trend trade. It has not really, it's given some back here, but nothing really significant. Let me look at the bigger, grander scheme of things. This is the dailies. So this is every day. As you can see, this was, you know, a year ago, October, November, you know, Christmas rally. Everything was rolling really high, and then mid-February, when we started having closings in Europe, is when we started dropping here. Well, before any closings here. I mean, at least to speaking where I live, we started having closings mid-March. So keep in mind, the financial markets are always very forward-looking. Even though the unemployment rate has gone down significantly, it is still relatively high. So they're just on, I mean, as long as many other indicators that are somewhat high right now but are on a downward trend, that's the way they look at it. They look at things improving overall from what they were, and rates are at 0. Rates were here at 2, I believe. Yeah, I believe they were at 2, and now they're at 0. You know, Jay Powell dropped it to 0. Up goes the market. So we gave some back recently, which is, in my mind, not a big deal. We're still above. This is a Fibonacci from the low and the high of the year, and as you see, we broke the all-time highs again. We're now testing them again. We went through it the first time.
Order submitted.
There we go. Now it's going against me, and I have a much profitable target. What was the all-time high here? 97 and a half. So let's bring it back to, there we go, minute chart. That's my order right here. See, it's kind of gone back and forth, and now it looks as if it's breaking that level now. Not by much. If it closes down here, then it's not considered a break, it's just a wick. I do highly recommend you trade using candles. It's easily the most used bar graphic or bar charting. Let's see what else is going on in the markets. VIX is down. You can see this was the VIX back in March. So you can see decent. This was the last downturn we saw. Some give back, retracement, if you will, back in June. This was more recent right here. You can see it's starting to calm down, kind of sideways. I think this is gonna, I mean, you know, we do have an election coming up. So I expect us to be in this range for quite some time. Let's see how far back I can go with this since we're here waiting. I can probably 15-year dailies. Let's go back to the last election, presidential, I should say, 2016. You can see there was a nice uptick after that in volatility, or around that time, going up, up, up. Now keep in mind, this is, they had, this is counter trend. So this is up, this means the market's going down. This is down, this means the market's going up. As you can see, it slowly starts to trend downward. Minor upticks and retracement. So it was going up, 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 and then presidential night, election, down, 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 down. So this is kind of expected. Even then, that's nothing. 22. We're in upper 20s right now. 28. I have moving averages on this just for a little more long term. I like to use moving averages on dailies and weeklies. As you can see, it doesn't respect it a whole lot like it does in equity markets and pretty much every other market, but this is a 200-day. Seems to be holding below that at the moment, but this is a VIX. VIX is kind of a wild child. Some people trade this and make a good amount of money. I was talking to some people about how people take long-term, 6 months options on, or yearly options on the VIX. No matter how good the economy is, the stock market is, you're gonna get these upticks every now and then. It just happens. Some selling off going. Obviously, you would be able to retire if you made this play. So no matter how good, great. This was after December, Black Christmas, we called it. Good. And then, I think 2019 was one of the biggest years on record for the stock market. You still get nice upticks, a nice little selling off in May, August. This is healthy, by the way. This is healthy. This, not so much. I mean, it never is. Let's go back to 2008. Not so much. So, I guess that was the high, 89. I thought the high was recently. We definitely tested them though. 85 on the VIX back in March. 2008 was the all-time high in the VIX. 89. So it's simply a gauge between 0 and 100. It's never gone below, never gone above. As we've seen in oil, it is possible. So this is taking a little bit longer than I'd like and expected. One thing I like to watch a lot is the dome. There's some very profitable sellers out there that just focus on the dome. They don't even look at charts. They're just constantly looking at the orders. It's called order flow. It's huge, highly popular, much more complicated. But yeah, So I do pay a small attention to that. And you can see right now it's in my favor, but not for long. It starts to get down here into the 84. You can see along the sides here. You don't see it so much at this price number, but if you go up to 3,400, then you can see at this time of day, you know, you get, you know, 100, 200, so I'm at 300. You can see this is like a little, even on this smaller level, this is a pretty thick line in the sand. Come 3,400 or 3,350, you'll see these in the thousands. You know, whole numbers are a big mental block in people's heads. So same thing goes for trading. It's a big block in the heads. So the numbers here are not, there we go. Some of them are piling in right now to the sell side. Right now it's just moving kind of sideways. That's where all the buying's been taking place recently here, the 84, 83, 3/4. There we go. Hopefully we can break that to my side. Again, I do apologize for the lengthy video, but it's the life of a trader. Sitting here staring at screens all day. I do try and get rid of that. I do have alerts set in place and make a little noise, or sometimes I can do it so where I get a text update on if it's entering, you know, one of my zones or one of my signals are being indicated, so I do not have to stare at, you know, I got 4 screens up here all day long. That's intense. And very few traders actually sit there and stare at their screens all day long. They're going in the morning, you know, do an hour, hour and a half of some prepping, you know, looking at their zones and where they want to get in, where they want to get out, and that's pretty much it. And then they're either, you know, change that data. I do it once at lunchtime. Lunch hour is pretty slow in the financial markets or stock market, so I'll go in the lunch hour and change some things around. Just because the price point, especially in a big up day like this, I mean, it's not even lunchtime and it's blown through all my sell zones. I did not, you know, sell here because it was just so much strong action. There was no sideways whatsoever. There wasn't that much selling on the RSI either, or any of my other indicators. There was no sideways selling, so I just stayed out. But in the afternoon, I'm gonna have to change these. I'm gonna have to move some of these my buying zones up, my sell zones up. I'm gonna have to go quite a ways back too to find those zones, because I don't even have data on that till September 16th. So I'm gonna have to move some of these sell zones up there. been a while. This is quite a nice little V we're looking at from a 60-minute standpoint that we've created here. So, I mean, technically it's you can see here a nice little V. We held at the 100-day. I remember I did a post on how we're looking, you know, we're gonna breach it, 1, 2, 3, 4, however. As I said in this video, we never closed below it. We always closed above it. We always managed to stay above it, which is a positive sign. This Fibonacci retracement here at the 23.6 level, it's not the strongest line in the sand as the moving averages is, but you can tell it held. It is holding. So even look at the RSI. No wonder this thing had a sell-off. Look how high the RSI was, up to 80. Anything above 70 is a sell sign. Up to 80, of course they're gonna sell. Look what happened back in March. Below 30, got to 20, and went kind of sideways, hovered that buy sign for the rest of March. Of course they're gonna buy. Of course they're going to. Excuse me. Even back in June. Going back to my minute chart. What's going on here? You're taking way longer than I like. I'm gonna move this up. What is the bottom here? I'm just gonna get out here and call it a day.
Target filled. Order canceled.
It's taking way too long, in my opinion, and it's just going sideways. It's going sideways. Thankfully, I got on a good price point. Look at that, 85 is seemed to be the ceiling, and it's still going up. You gotta protect your bacon. And look, aren't I glad I did?